Let's welcome Anand Shah, CIO PMS in AIF at ICICI Prudential AMC, who joins us on the show. Hi Anand, good morning. Good to see you in as always. What are you making of current market setup? There is a lot of optimism that we get a trade deal, that earnings pick up, and hopefully the market, gives up the recent underperformance. On the contra side, though, the market is still not very, very cheap. How are you feeling about the Indian markets?
Hi, very good morning, Nigel, and thank you for having me. I think you are right to the extent that we are dealing with global growth slowdown. I think the environment out there is as complex as it can get, and global trade obviously has been sort of disrupted. And on top of it, you also have slowdown in some sense in India as well. And I think we have taken some steps in the form of, giving a little bit of a monetary stimulus and a little bit of a fiscal stimulus. And again, I'm using the word little bit because that will not take us through, and a lot might be required, but we'll wait for this trade deals. And I think as that uncertainty reduces, maybe the need for further stimulus in India might not be there. So with that background, I think I'm pleasantly surprised with many of the results because many companies have done a good job on bottom-up basis, especially if you see banks and others where they have surprised on the positive side on the results. Many businesses have shown very strong cash flow generation. Again, that tells you that they are conscious of the difficult times, the slowdown that we are in, and have taken some steps to improve cash flows, profits, and to some extent repair the balance sheets.
Okay. Anand, hi. So you sound quite optimistic on the results. So where does that leave us? I mean, the whole premise was that this is going to be a year of earnings recovery, at least 12-13%, if not better. So are we still on track with those expectations?
So I think the story ahead would remain, and I've been saying this for a year now, that will remain more bottom-up than top-down. I think we will have to deal with what we have today, which is lower global growth, impacting to some extent. Inflation is low, so the nominal GDP growth rate is also a challenge. That's below in a single digit in a long time. So all those will weigh down on the broader earnings growth rate. And you have to see that in the context that we had a very strong earnings growth rate for 4 to 5 years. So the base is very high. If you see corporate profit to GDP from the lows of 2.5% is now at 4.7, 4.8%. So I think there's very little room to further squeeze more profit out of the same GDP. So I think what we need is nominal GDP growth rate, which is a combination of a real GDP growth rate as well as inflation. And that remains fairly low, which you might not be complaining so far as long as it's still in the positive zone.
By the way, okay, got that. I just want to go back to Aether because Hormaz is pointing this out. It's really important. So the reason why we've seen some of these large blocks is because the lock-in period has ended for some categories of investors, and therefore we have seen those large blocks worth over 16 crore shares moving around and still down about 9.5% on Aether Energy. Anand, so walk us through last 2-3 months as you've seen this whole GST change and the market tilt its focus towards consumption. Autos have done so well. Walk us through your broad portfolio changes, if any, that you've made.
No, I don't think we've been more bottom up for almost a year now, more than that, and we've been more balanced. So prior to that, we had a lot more overweight in manufacturing allied. As we see recover in India in those segments, we were more overweight corporate banks. Now it's been more broad-based, except that in consumption, we have been more focused on services over goods. So this has been one, and we have upped our sort of exposure to the consumer services businesses while we remain underweight on FMCG and consumer goods in general. So that's been the only incremental change that we have made.
Okay, all right. Anand, if I get sector specific, I think the sector of the morning is paints. The question is, has Asian Paints and Berger Paints seen through the so-called geo moment? Because the stocks were under pressure. You had a large conglomerate came in there, put in 10,000 crores on the table. said that they're going to be very, very aggressive. They have been fairly aggressive. But these guys have at least held their ground, and it appears, at least some brokerages are indicating, the dent hasn't been that big. Whether growth comes is another question, and valuations, whether or not you're comfortable in it, is another question as well. But what is your view? Asian Paints is one of the top gainers today because the street is now willing to look ahead after the recent price correction.
Sure, I think, look, one of the key element in, wealth creation has been consolidation in sector. And we had a very long period of time when you had a limited competition in that segment, paint segment. And generally, if you ask me, in FMCG, in auto, in every areas, India has practically had a duopoly, sort of a 2-3 players in each segment of the market. And that worked out very well for that. And they were stark outperformers for almost a decade, when actually everything else, particularly in manufacturing, was not doing well. So you had a situation where you had a strong earnings growth rate, peak margins, and the peak PE multiples. Since then, you know what happened in the last 4-5 years in these areas where stocks have been stark underperformers. As the economic recovery happened, the inflation came through as manufacturing picked up, the commodity prices also to some extent picked up. And that led to, but more importantly, what has happened in these areas is new competition. So it's been after a decade of a strong profitability, high ROEs, that you have seen new people coming into that business. Now, having seen the entry of new players with a strong balance sheet, I think there will be a time when there will be still muddling. I don't think we can have a clear recovery in growth and profit. Growth is also a challenge in that context, but nevertheless, if growth comes through, but still the margins will take time to recover as you have now more players in this area than less what we have seen in the previous decade.
Just a bunch of other names as well, right? Indigo is up. Indigo, by the way, is the #1 volume-led gainer. Sud was in the morning talking about how with that large forex loss, was unsure which way to go on this one. So, but it's up and about. Asian, of course, is up. Asian Paints is up 5% nearly now. So the big one as well. Paytm is up 4%. Paytm numbers look pretty good. And there is about 4% gain here. Britannia with the new boss at the top, 4% here, 6,120. Black Buck, which is, I think the Fastag data came out for the monthly numbers, 8% higher on Black Buck. It's up at about 705. It had corrected a little bit recently. And so on and so forth. Shipping Corporation of India is up about 6%. And by the way, on volumes, all of this stuff, right? Not small volumes. Novama reported numbers, so solid performance, 2.5% here. Sirma is up about 3.6%. Ixigo had lost about 100 rupees from the highs. Ixigo is coming up about 2.5% this morning. So that's where the gainers are at. And of course, on the downside, we've highlighted Ather with that lock-in ending. Delivery, of course, I think we've highlighted as well. 6% lower. Again, numbers. Stocks done very well, I guess. Remember, with all this stuff, stocks have run up so much across the board that pullbacks are, they seem sharp when looked at against recent performance. NetWeb, for example, right? Look at this one. I think 10% quickly after results, down another 3%, 3.5%. So it had a one-way move, and I think for the year it's still up 30%. Similarly, MTAR Tech is something that I've highlighted after that guidance that they provided here on this channel after the last quarter numbers, and from the highs of 25.70 is down to about 23.50 very quickly, 3 days. Right. So that's the kind of market we find ourselves in. Fair bit of profit booking as well.
Just one more stock, Infra, we were talking about it on Tuesday, Prashant. And the stock has already seen a big rally. But clearly the street believes that this is a redefining moment for the company on the whole. Because after seeing such a big rally, I think it's up 20-25% in a matter of a month or 2 months or so. But clearly now the scale is increasing. And just to tell our viewers, we want further clarity from the management. And in the next 60 minutes, we'll have the management on the show as well. So that profit taking that we saw on Tuesday has got bought into, but clarity is awaited. So we'll get the management in the next 60 minutes on our channel itself. Yeah.
All right. Maybe, I don't know if, Anand, just a quick word, if you will, on and it's right up your alley, right? The capital market businesses. What do you own there, and what part of the capital structure across this do you own, and would you like to get behind or bet on?
I think one of the other, if you broadly see how the consumption is panning out, and I did say about services taking precedence over products in the consumption basket, I think financial services products and services are another thing which have been sort of lapped up by Indian middle class in general, and more and more penetration scope is still there. So I think that's one which is driving growth across the capital markets. I think the financialization of the savings and moving beyond just bank deposits, gold, and real estate, I think we are clearly seeing over the last 2 decades. And it's not yesterday, but for last 2 decades, we are seeing slowly and steadily the savings pool is now going beyond gold, real estate, and bank deposits. So I think the capital market plays in general, depending on whether it's life insurance, asset management, wealth management, broking, and others, are differently but benefited by this one particular theme, which has been ongoing for a while.
Okay. All right, Anand, we'll leave it on that note for this morning. Good to have you in and get that perspective. And we look forward to another conversation soon. You have a good day.